Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, welcome. We're just gonna have a little education learning class today. Gold is not moving; it's closed until Monday for Good Friday and Easter Monday. There is some securities that are moving, but what we'll do is we'll do a top-down on gold, just to learn how to do top-down analysis and answer any questions if you guys have. And then maybe we can see a security that's actually moving. I don't know if we'll take any trades today, but good for learning. Okay, so we'll just go till about 8 p.m., 8:30 at the latest, and just see what's going on. Okay, guys, so we'll get started in about 2 minutes.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, welcome to Stock Sniper Trading. Thank you guys for joining. My name is Ron, my partner is Dave. It's almost 6:30 p.m. Eastern, and it is Thursday night over here, April 2nd. So guys, I know gold is not moving. I know the markets are closed for gold right now. It is Good Friday and won't be open tomorrow all the way into Easter Monday. There is some other securities that are moving real slow right now. NASDAQ is moving, US 30 is moving, some currency pairs are moving. But what I'd like to do today is more like an education class. What we'll do is I'll do a nice thorough top-down analysis on gold, maybe give you guys some levels, points of control, points of interest, so that you guys can have this chart for Monday, Tuesday when the markets do open up. And if you have any questions, you're more than welcome to ask. And I'd like just to go over just some things education-wise and help you guys out. We could have canceled the call, but I didn't want to. Yesterday, guys, I apologize. I had a really, really bad migraine headache, and I took a couple Advils and I passed right out. I went right to sleep early. I feel much better today. So I didn't want to miss another session with you guys. So we can do something. You guys let me know what securities are moving, what you guys want to look at. But first thing that I want to do is a top-down analysis on gold. And then I can provide you guys the link to that chart, and you guys can have it and maybe utilize that going into early next week. Okay, guys? So thanks everyone for joining. We won't be too long tonight. There is a big hockey game on. Montreal Canadiens play New York Rangers tonight. Montreal is right up there, almost going to win the whole conference behind Buffalo and Tampa. So it's exciting right now. So, but we'll do some charting. Okay, guys? If you guys remember, yesterday was Donald Trump's speech at 9 p.m. Eastern. The markets were very volatile, and you can see how they moved today. So again, guys, just please trade with proper risk management going into next week after the Easter long weekend. We'll come in early tomorrow. Again, it is NFP. But some securities aren't even open, won't even be moving. We can do same thing. We can do some charting. We can do some analysis. Or if you guys want, we can call the session off and we can all have a good sleep in. We'll figure it out. Okay, guys? But trading will resume next week, and we'll be right back into the markets, okay? So we'll do our Tokyo sessions next week as well, and then we're going to start to move into New York, okay? So, guys, thanks, everyone, for joining. I appreciate everyone. Just going over the Forex Factory news, so you can see today's date, Thursday, April 2nd. We had our U.S. unemployment week-over-week claims this morning at 8:30. Came out pretty good. 202 is a little lower than 212, 10,000 individuals less applied for unemployment benefits in a week. So that's good. We'll see if they can sustain this, continue week over week. It's like trading, you improve for 1 week, but now you want to see, can you improve a following week, another week? Can you get good weeks in a row of good unemployment, not just 1 week? So we'll keep an eye on this. So next week, when we're looking at this unemployment claims, you're going to see that the previous number will be over here. It will be this one, 202. And maybe their forecast might be, let's say, 196,000. They're forecasting maybe good unemployment numbers, and then we'll see the actual number, okay? There was a couple FOMC speakers speak out throughout the day, and you can see already we're starting with the bank holidays for Good Friday. Starting on this side of the world right now, New Zealand bank holidays, Australia bank holidays, and then we're going to move into tomorrow. Tomorrow morning, you can see we have Swiss bank holidays, German bank holidays, British, UK bank holidays, Canadian bank holidays tomorrow. We do have the non-farm payroll numbers will be coming out tomorrow. Stock markets are closed, but they still will release these numbers. So we'll see. Look at the numbers. Like you see, the previous was negative 92,000, and they're forecasting a good number, positive, of 65,000. So you can see it's not a negative, but these are still really low numbers. 65,000 jobs created in a month in the United States is basically like nothing. So these numbers are really, really low, okay? And this negative 92,000 was really bad. Really bad, okay? So guys, if the numbers are not good, they're not creating jobs, that's going to be bad for the US dollar. That would continue to make gold strengthen, be strong, and see investors going into it. If these numbers are really good, like let's say this forecast comes out 250,000 jobs, then they beat that by like 4 or 5 times, let's say, that would be extremely good for the US dollar. It would see more foreign investment go into the dollar. It could see job created, maybe stable economy now. Things are turning around. And then you see assets like metals like gold and silver start to depreciate. Maybe you'll see stock markets start moving up with the US dollar strengthening and things like that, okay? And we'll have those numbers and the unemployment rate tomorrow, okay? I'll let you guys know if we do that session because markets won't be moving too much. So maybe we take a day off, spend some time with your family, get a good night rest. But if you guys want, I can come in for an education session. It's no problem. We can turn it into kind of like a webinar style and do like a Q&A or whatever you guys want. Okay. I don't even have earnings up because there's nothing going on in earnings tomorrow as well. Stock markets are closed. In the news, day-to-day news. So gold slides as Trump gives mixed signals on Iran war resolution. So you saw yesterday what he was saying. Hopefully you guys tuned into that. Oil prices have ripped higher right now. So you can see oil was trading at like $97 a barrel and it hit like 115. So we'll see if oil continues to move up with everything that's going on. I know we're seeing it at the pumps right now. I just put some gas in the car. Regular gas where I am here in Canada was $1.85 Canadian for 1 liter. I have to put premium gas in my cars, and that was $2.20 for premium for 1 liter Canadian. So I know it might be much higher where you guys are at, but for us over here, it's pretty high all over the world. So February trade deficit surges to 6-month high on gold imports. What else we got here? U.S. jobless aid filings fall to 202,000 as layoffs remain low. So there's an article there. This is the weekly unemployment claims that I was just talking about. U.S. defense stocks see no Iran war lift after early surge. Starbucks, you can invest in this company as well. You can trade it. So there's lots going on. Guys, while I'm talking about that too, we have our upcoming stock and options boot camp. So if you want to learn something other than Forex and futures, if you want to get more on the investment side, learn about dividends, options trading, how to do a covered call and things like that and earn passive income. We're starting that on April 20th, and you guys can join that. There's the links and all the details provided on the website and on the Telegram. Okay. We could also do Bitcoin tonight if you guys want to see something different. Bitcoin is always moving 24 hours a day, regardless if there's holidays or not. This thing doesn't stop. Okay. So that's our news. Guys, some signals were sent out today in the Discord. Gold sells and looking for some moves in the indices as well with NASDAQ. Slow market day today, not much going on. Guys, the free Telegram link is pinned at the top of YouTube for you guys. So thank you guys. Over 100 viewers. I know it's not a busy call because gold's not open, but I do appreciate you guys joining. If you guys can leave a like, hit the like button, subscribe to the channel, join this free Telegram. It's got all of the things we do at SST, trade recaps, Dave with the snipers in the New York sessions, and all of our links to our YouTube sessions and all the promos and things like that we do here. And guys, if you want to visit the website, stocksnipertraining.com, here it is, all the details, when and where we're doing the stock and options boot camp. So you can see it's right there. And also when you sign up, you get the 3-month premium plan with everything we offer here at SST, the education, trade signals, the private Discord, all of the sessions that we do and the trade signals and are there, and also a one-on-one with myself. So you guys get to have a one-on-one with me. I'm going to do this for another week. We've had a couple signups already, and I got to limit these one-on-ones. So it's it's first come first serve basis right now, and then I'll run it for another week. And that's kind of on the house. And then the 6-day boot camp, it's all detailed in there. Okay, guys. And you guys are welcome to upgrade or extend your plans as well if you guys want. And just sign up on the website or send us an email. And guys, hit a subscribe button and let's get started. Okay. So what I'm going to do, I know, guys, let's reiterate, gold is not moving. You can see the market is closed right now. That candle is not moving. But what we can do is a quick little top-down analysis. Okay. So what we can do is we can start off like on the higher time frame, or I can just ask you a couple questions based on what we see right here, and maybe just to see if you guys are on the same page with me. But before I do that, I just want to welcome everybody. Nick, welcome. Market gold is closed. There is a few like if we look at the watch list right now, I can see right now NASDAQ is moving. NASDAQ is open. Dow is moving. It's open. S&P is open. You can see gold is not moving. What else we got going on here? You can see currency pairs are moving. Okay. Bitcoin is moving. GBP USD euro is moving and things like that. So a very slow market. You know, sometimes it's not even worthwhile even trading. I when markets are closed, even if there is a security trading, I look at spreads, right? Look at your spreads, because sometimes spreads do increase, and it's not even worthwhile trading, because with high spreads, you know, and then you're looking for small moves when there's little volume. It's just it's not a good situation to be trading in. Okay. So yeah, guys. Lucy, welcome. Thank you for joining. I hope you have a happy Easter as well. Danny, welcome. Yeah, so guys, yep, this is exactly Danny. So this is going to be a live yapping session. This is what we do here. When we're not trading, we're yapping. So if you guys want to join yapping with us, you guys are welcome. Conrad, welcome. Thank you for joining. And you guys on YouTube, welcome, guys. Who do we got here? Charles, my man, welcome. Yes, gold is closed until April 6th, guys, until Monday. I believe that's Monday. We'll reopen. We're going to come in for a later Monday Tokyo session so that the markets open up, the volume is moving, we have some analysis, and then we can trade Tokyo on Monday night, guys. So I hope you guys can join me on Monday night, and we'll get our Tokyo session continued. We'll have better volume to trade that night. Charles, can we do GU or US30 and NASDAQ? Absolutely. Yeah, we'll pick one of those ones after I just do a top-down, help you guys out on gold. Yeah, if you guys would. Charles, you choose for us. How about that? Since you're the first one here, you pick either one of those. What would you like me to analyze? GU, Dow, or NASDAQ? You pick, okay? Right after I'm done the gold, Charles pick, okay? John Bitcoin, welcome. Welcome, guys. How's everybody doing tonight on a slow market? Hello, all the way from Bolivia. Welcome. Thank you for joining. Welcome. Tony Gold, welcome. USD JPY? Yeah, we can throw that in the mix as well. It's still NFP tomorrow. Yeah, yep, it is, but we won't have too much big moves with all the banks closed. Okay, guys? So guys, first thing is, you know, when I say a structural candle, okay? So I just want to write a few things down. So you guys know when I say a structure candle, structural structure. Do you guys know what this is right off the bat? Does anyone know what this is? When I say this, first thing, like, you should know exactly, we're going to do education right now, okay? So maybe I should write on here so people come in. I'll write here, gold is closed. Just so everyone knows, gold is closed. Today is charting and education, okay? Just so everyone, we're all on the same page. Okay, now let's start a little education, okay? Because this is what I want to talk about right now. So when we say a structural candle, do you guys know, like, right away how to analyze which candle on this chart? Okay, if I was showing you this right now, which candle would you pick? If you guys are on your charts, give me I'm on the 5 minutes, okay? These are 5-minute candles. So tell me the 5-minute candle that is a clear, obvious structural candle that's worthwhile cutting in half, finding a point of control, and telling me that that's abnormally large volume. The big blue one. Okay, Thomas, the big blue one. Are you assuming this big blue one right here at Thursday, April 2nd at 9:45 a.m.? This one? If we all agree, Thomas said the big blue one. That's the biggest blue one I see on my chart. Is that the one? Because if you're wrong, I'll tell you guys are wrong. If you guys are right, we're right. Okay, so you guys are correct. That is a structural candle. Now let me explain it a little bit more deeper. And I need you guys to understand, when you see this candle made in 1 minute, in 5 minutes, 15 minutes, in 1 hour, in a 4 hour, or a daily, this is your candle. You have to make a decision right away. And you just got to know that this is a structural candle, okay? There's no ifs, ands, or buts. Let's break it down now. So you guys are absolutely correct. That is a structural candle. Now I'm going to break it down. Why? Okay. So we do have some resistance right here. I can talk about what is resistance. Some of you guys don't even know like what is resistance, right? So resistance is where sellers are, where the volume, you see where the buyers come in, and then the wicks show us rejections. Then it comes back down. The volume comes in again, right around this red line, and then you see there's a rejection again. So that's telling me that there's some sellers there, right? I can even show you a red box to also illustrate that there's sellers, okay? So we're talking now, we can talk about also on our education, we're talking about structural candle, but this is how I can talk about other stuff. We can talk about resistance, right? Hopefully I can spell right today. I talked about structural candle, resistance. I can talk about a zone, like a red zone. And we're going to continue. These are the topics, like whatever I see, this is what we're going to be talking about too. I talked about a wick, right? Wicks. So we're going to talk about some wicks tonight. I hope you guys are strapped in for an education session, okay? So these are these good sessions that I promise you're going to walk out of here and you're going to learn something, okay? So you guys got to understand the markets are not really moving, so there's not much trading, but we can educate and we can learn, okay? Because on Monday night, the markets are going to be moving really fast and we want to know what we're doing, okay? So hopefully this, it's a free workshop, guys, a free course, free webinar, whatever you want to call it. All I ask from you guys is just please hit the like button on YouTube and subscribe. If you want to learn live, then just judge us after the session. And I want to ask you guys if you learned something new tonight, okay? So see that red line? That's resistance, right? So let me just, sorry guys, I haven't used this in a long time. Okay, so this is resistance. You guys all know what resistance is, I assume, right? Resistance is like a ceiling where I can say it's a ceiling, right? In your house, you have a floor and you have a ceiling. Okay, it can be, you can call it a ceiling. We can call it also where the sellers are. Okay, so those are the different names that we can call this red line, this resistance. Okay, now you see how the volume comes right back at the exact red line, like where those wicks are, and then you see the sellers, it's still that ceiling, and then it pushes it back down, right? And then it comes right back up, right there again. And you see the buyers have not closed above it, then it pushes right back down, okay? So that is resistance now, okay? And then you can see you can make it into a zone as well. You can go like a little bit above, you can go a little bit below, and you can make it like a zone. So you don't just have like a line, like a point of interest. So you can make it a zone, and you see it's still a red zone. So when we say a red zone, we say it's a sell zone. Some traders call it a resistance zone. Some traders call it a supply zone. Supply, another word for supply, you guys hear that word, is the first time there's resistance. If it comes up again and there's resistance again, and it comes up a third time and there's resistance again, over time, resistance starts to turn into supply. Okay? Do you guys understand that? But I look at it as it's the same word. It's the same word for everything. Just, I don't like to confuse myself and I don't like to confuse you guys because this is the same thing. Sellers, ceiling, resistance, or supply, or red zone. All 5 of those things mean the same shit. It's just, if you really want to get technical and learn what each one of those is, you can take your education in trading further and go and research those things. But most traders are just beginners, so that's the easiest way to understand that, okay? And then the only other thing I do is when I spot resistance, I stretch it into the future. Do you guys know why I do this? Why do I do this? I don't think I've ever asked you guys this question. Why do I do this? I always just say, guys, I stretch this into the future, but do you guys know why I do this? Anyone on Zoom? Price may come back? Yeah, absolutely. Once you establish, it's like an order block. It's a block in the market. Just because when you identify it, the price could eventually come back here, right? So when it comes back, then I always assume it's going to be a red zone until the buyers can prove to me otherwise. That's it. That's the simplest explanation. It's always going to be a red zone unless the buyers can close above it and invert it or change the character, right? Or break the structure, whatever you guys say. And then look, when I stretch it into the future, now we get to that big structural blue candle, okay? Why is, this is a big blue candle as well, okay? So let me just break some things down to you guys. Okay, that's also a big blue candle, right? It's a nice one. I could cut that one in half as well. But what gives me more and more emphasis is that this big blue one was the one that impulsively broke above this resistance and closed above it, right? So this candle is a big blue candle. This is a big blue candle as well. But I place more emphasis on this one because this one broke through the zone and actually closed above it, okay? So now when we have that, first thing I do with my zone is I change everything to represent buyers. So first thing how I represent buyers is that red line, which was resistance. Now with the closing blue volume of buyers now proving to me that close, I momentarily make that line green, right? To represent buyers. And another word for buyers is, what's the word? You guys tell me. So now it turns green. So instead of resistance, some traders say support, right? And if a red resistance is a ceiling, then a support is a floor or your foundation. Just like in your house. Your house right now, where my feet are, they're on a foundation. They're on a floor. That's my support. If right here, the ceiling above me that's the resistance. If I go upstairs to go get a drink and I've got to walk up the stairs, the ceiling now becomes the floor, right? Very simple. That's how I started to learn support and resistance. And another word is the buyers. This is now buyers, right? So now we gotta look for like a retest to now make this a floor. So there's where the blue candle closed above, just right away, one candle. Sometimes that's all it takes is one candle. Sometimes it might take more, okay? But as soon as I see it flip, what I do with the zone and the line, I just change the color. See how I went from red to green, and then the zone, red, I make it into a green zone, right? And then I stretch it into the future, right? Now you have a confirmed candle closing above. So let me write this down. We have now confirmation, right? Remember that big fancy word? Confirmation. Confirmation. Hopefully I can smell tonight. Okay, confirmation. Another word for confirmation is, what's another word? You guys tell me. What's another word for confirmation? Okay? You guys tell me. You guys teach me. You guys teach me. Well, if a confirmation is a big English word, what is it confirming? It's just confirming that the volume closed and it's not an impulse. That's it. Like you see this blue candle right here. Let me move in. So I love to zoom in too, guys, so you really focus. This was a big blue candle. Blue, 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 blue. It came into, remember, that was a red zone. And the sellers were there. Remember, it didn't close above there. And then it got rejected and it closed right there. So the only confirmation that this gave me at close was it got rejected in the red zone and it closed as a bullish pin bar. That's the confirmation I got. But it did not confirm to me that it closed above. None of these candles actually confirmed to me they closed above. They confirmed to me that it was an impulse and it got rejected. This one confirmed it closed inside the green box. This one confirmed it got rejected and closed below. This one confirmed to me that it got rejected here and pushed back down. This one confirmed to me it closed right here below the box and went back down. This one now, the one that we were talking about, it confirmed to me that it actually closed above. Okay, that's a confirmation. And now what we look for after we get a confirmation is we look for either an ignited candle that opens ignited and to continue the momentum, but we want to really wait for a retest. Why do we want to wait for a retest? Okay, you know when traders say wait for a retest after a confirmation, why do we say this? Do we just say this to sound smart? Why do we say this? Why do traders say go get it's a better, higher probability setups if you look for a confirmed candle that closes with volume and you wait for a retest? Okay. The very easy question is because now you're getting the support, right? So that candle closed above. Now this red zone now could get more pending buyers now placing their orders in here because now the volume closed above. When this one came up here and got rejected, the buyers probably didn't place their orders inside here. They probably placed them lower to get back in at a lower price. But now we flipped the zone, okay? So this is now where this candle opened black and came down. And you see it's retested like the zone. When it comes down, okay? I want you guys to learn this because when we go into live trading and I'm telling you, when we come down, it came down. And what it's doing is there's pending orders in here. There's green orders there. There's green orders there. And what it's doing is it's coming down to pick up these green orders, to pick up these buyers, there could be even buyers waiting in here. There's buyers everywhere. At every single level, like at every single number here, there's bids, there's asking price, there's bids, there's limit orders, there's everything. Okay, so there's a whole bunch of orders, and they're not just these are buy limits, right? And buy stops. Okay, they're not just. I see some traders understanding that they're just buy orders. No, when there's orders, they can be sell orders too. What if there's sellers that want to think that it's coming up just like this, right? You know, when it comes up, then it goes back down. It comes in and it goes back down. It comes in and then it goes back down. It comes in and it goes down. This one came in again. So there's sellers now putting their orders in with a red. They want to get filled too. There's a sell order here. 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 And sell orders, they are sell limits or sell stops as well. They want to go with this. Just like here, how this candle closed above, like right in here. When it came down, there was buy orders here. There was buy orders here. Okay, so those buy orders also got filled, but it did not move back up. Okay, because there was more offers, right? There was more red orders above. So then they pushed it down, and these buyers that got filled, they suffered drawdown. Maybe they got stopped out. Maybe they held it all the way back up, and then they're back to break even, and then they got in the money. Okay, but there was also sellers there. When it closed above, there was sellers there. There was sellers here, and there was sellers there. And then the market came down. It picked up the buyers and the sellers, but it looked like maybe more delta negative volume when it grabbed all those orders. It looked like maybe it was leaning towards more sellers. Then the market pushed down, and then it came back up. You see lower highs, maybe more sellers, and then they really pushed the market down. But it found a strong support down here and came right back up. So you see, all of these can be pending buyers and pending sellers, right? That's how a transaction works. For every buyer, there's got to be a seller. For every seller, there's got to be a buyer. They basically shake hands, and one of them is going to make money and one of them is going to lose money. That's how trading works. When I make money, someone loses money. When I get stopped out and I lose money, someone makes money. That's how trading works, okay? I want to hopefully be on the winning side when I'm trading so that I can be making money, okay? So now it picked up those orders, but you see now it got rejected with a higher low. So it's telling me it picked up more buyers, higher low, and it had enough volume to continue to break above that candle, make a new high. Then it got rejected because there's sellers up there, and they brought it right back down. And it closed as a bullish pin bar candle. And then you see after, again, next candle opened black, came back down, higher low, picked up those orders, and continued to move up with a higher high, and closed with positive, nice volume now. Look at that candle compared to that spin top. So when I see those type of candles, those are not like structural candles, but they're important volume-based candles. So what I do quickly with those is I cut them in half. I try and find the halfway point, and just to find the halfway. And then I see again, The candle opened, blue, it came up, but it did not continue filling that wick to extend the uptrend. Sellers came in, lower high, they held it down, then they pushed it all the way back down. But look at it, it got 3 wicks right here, here, and here. So it looks like this zone that was red, resistance, all this time, as soon as this candle closed above, that's it. It flipped, and now what we could do is buy, and then we place our stop loss below here, and we're in the money, right? Now, let me get rid of all of these lines. I'm sorry, guys. Did those lines help you at all? What I'm trying to just do with these red and green lines is just to make you understand that there's sellers and buyers. Because I got a question one session and said, Ron, when a bullish candle closes above, when it retests, it picks up only buyers? No, that's in fact incorrect. It picks up sellers and buyers. But the market will move with whatever side is more. That's why we say delta positive, it picks up more buyers, or delta negative, it picks up more sellers. Okay, when you're following like an depth of market or an order flow, you're going to start to see that delta. Okay, so that's what we get a confirmation and retest. Okay, and that's where you can get better, higher probable setups. But it's understanding how to figure out these zones. That's what's a hard part of trading, is figuring out where these zones are and things like that. Okay, now, sorry, to go back to the original question when I asked you, which one of those candles was the structural candle? So you were absolutely correct to tell me this one. Now, when we get a structural candle, what I do is I have rules, okay? Whenever I figure out a structural candle, whether it's a blue candle or a bullish candle or a bearish candle, I have rules. And guys, you can write these down if you want rules as well, okay? First thing that I do, number one, we're all correct. We understand now what a structural candle is. Now, number two, step 2 is, what do we do? Now, we have to figure out the point of control of this volume. Why? Why do we want to do that? Okay, I'll explain how we do it, but why do we want to do this? Anybody? Why do we want to do this? I know some of you guys we do it because we do it and that's it. But a lot of you guys have no idea why we do it. Okay, why? It's a price magnet, Nadia. That's a good explanation. Yeah, it's called the golden zone. Okay, let me explain this in easier terms. Okay, if we go right now and buy something, let's say we buy a t-shirt. Okay, we're all buying the same t-shirt. Today, the t-shirt for Good Friday, today the t-shirt is $10. Okay, let's all understand. If today is Good Friday, the t-shirt is $10. Okay, but on Monday, it's Easter Monday, the t-shirt costs more money and the t-shirt now is $20. Okay, so I can buy the t-shirt today for $10. If I wait and I'm thinking about it, on Monday the t-shirt is going to be $20. Okay, so we got two prices, $10 and $20. Now, what is the best price for me and you to buy at? What is the best, absolute best price? If the shirt is $10 and $20, what is the absolute best price for a buyer? What do you think it is? $10. Yes. Yeah. That is the absolute best price, is $10. Okay. If I can get that shirt again next week for $10, I'm buying the absolute bottom, $10. Perfect. We got that. However, maybe we're not going to get $10. Okay. Because there's all type of bidding and buying and things like that. So maybe we can't get $10. But what is the best price for the seller? As a seller, what does the seller want to get? Does the seller want to sell it for $10? Or does he want $20? What price does the seller want the t-shirt for? $20. Very simple. Okay. So now using another example, instead of a t-shirt, what if gold is $5,000 and gold is $10,000? Okay. We have a buyer of gold that wants to buy gold at $5,000, but we have a seller who wants to sell it at $10,000. Obviously, the buyer wants to buy it at absolute bottom at $5,000, but the seller wants to sell it at the absolute high, at the premium of $10,000. Okay. So neither one of those scenarios is going to win. The buyer is not going to get it at the cheapest price, and the seller's not going to sell it at the highest price. Okay, so let's just understand that that's not going to happen. Okay, so no transaction. Now, how can I get both sides to shake hands? How can I get the buyer and the seller to shake hands on the t-shirt? What's a fair price for the buyer and what's a fair price for the seller? For the same t-shirt, $10 and $20. 15. Amazing. Okay, so you see how simple that is? $15. How did we figure that out? You get $10 plus 20 equals 30, and cut it in half, divided by 2, we get $15. Now, $15 is a fair price, where if I'm buying, I want the t-shirt at 10, but I can't get it. If I can get it at 15, I'm happy. I paid an extra $5, but I'm not paying the absolute Hyatt, so I'm getting a little bit of a discount. Same with the seller. He didn't get his $20, but he didn't sell it at 10. He met me in the middle. So I'm happy, the seller's happy, we shake hands, and we transact. And that's a efficient transaction. Now, maybe I'm not the only one that wants to buy at $15. Maybe you want to buy at $15. Maybe Christoph wants to buy it at $15. Maybe Sergio wants to buy it at $15. Maybe Jove wants to buy it at $15. So you guys understand what I'm saying? But I'm just using an analogy as a t-shirt. What about when we go to gold? Remember what I said about gold? If gold today, Good Friday, is $5,000, and then it goes all the way up on Monday to $10,000, what if we are trading on Wednesday? Okay, we're probably not going to buy gold at $5,000 and the seller can't sell. So what is a fair price for gold with that analogy? $5,000 and $10,000. What would be the fair equal? $7,500. Perfect. You see how you guys are now? We can do this with any security. Okay, we can do this with any security. If US 30 Dow Jones is $50,000 today, and Donald Trump pumps up the market on Monday and it goes to 100,000. Okay, that's an extreme level. But then what is a fair value for any trader? If 50 and 100,000. Okay, guys, this is very easy, but I'm trying to show you different securities and crazy pricing. $5 and $10. We had 5,000 and 10,000. Now we have 50,000 and 100,000. 75,000. Okay, perfect. We are all on the same page now. Okay, so you guys understand that's fair value. Now let's take it further. Now that number that you just figured out, that's also called the golden zone. In trading, it's called the golden zone. Have you guys ever heard of the golden zone? That golden zone is mathematical percentages in between 38.2 all the way up to 61.8%. Okay, because if I just cut it in half, I'm getting exactly 50%. But we got to get the buffer zone. Okay, we got to get a little bit above and a little bit below. Okay, so now let's do it with this candle. Okay, so what price did this candle open at? Let's see, opening price. Look at the opening price, okay? So when I'm talking about like psychological numbers, now you're understanding like psychological numbers. This candle opened at $4,601.50, okay? That's an exact, efficient psychological number. Do we all see that number right there? Right over there, okay? See where this remember what we said? The structural candle opened, and look at the number. Okay, so we got the opening price. Remember, a candle has an open, a high, a low, and a close. We always say OHLC. Make sure you learn these things. This was going to be our Saturday webinar, what we were going to learn about a candlestick, but it was Easter, so we're going to do this next week. So I want you guys to join you. That's going to be another one of these type of webinars, but it's going to be free for you guys, and we're going to learn a lot. Believe me, if you stick with us, everyone on Zoom and YouTube, you stick with Ankh, I'm going to teach you everything about trading inside and out. You're going to know the anatomy. You're going to know everything there's to know. You're going to know more than me because you're going to take your education further than me, and then you're going to start teaching me. Okay, you guys are going to be my mentors. You guys, I'm going to learn from you guys now. Okay, I'm giving you as much knowledge that I know, and then you guys are going to take it further, and then you guys are going to take it. I'm going to give you guys the torch. I'm going to give you guys the candle, and you guys are going to ignite it and teach me more. Okay, this is how we're going to do this. Now, opening price right there. The low is the wick, low wick. The high is the high wick, and the C is the close. Every single candle has this. 1 minute, 3 minute, 5 minute, 10 minute, 30 minute, daily, weekly. They all have it, okay? Some candles don't have wicks. That's why you got to know what is ignited. Okay, there's some candles that don't have a low wick, but that is the lowest price. Okay, so now the volume came all the way up, and I know where it closed. There's the closing price. So I'm just going to put a red line at the closing price so we know. Okay, so that candle, the volume, it opened at 4601.50 and closed at 4633 and 96 cents. Okay. Now, notice I didn't go to the absolute lowest. I could have. I'll tell that in a minute why I go to the bodies. Okay. But first, I want you guys just concentrated on this. So we know the opening price. We know the closing. Now, easiest way. Okay. I sometimes just cut it in half. I just visually look at the candle and I try to my best to cut it in half. How many of you guys do this? You just cut it in half without using anything, without using a tool. You just cut it in half. I do this when I scalp 1 minute candles because 1 minute candles are very, very, very fast. And they open and close every 60 seconds. So sometimes you don't have, the luxury of pulling out your toolbox, getting the tool and measuring it because the next candle could open and you miss out on a scalp. Remember, scalping is very, very fast. But if you're trading on the 5 minutes, the 15 minutes, 30 minutes, hour, 4 hour, daily, weekly, you have that much time to do a proper analysis. Okay. If I'm on a 5 minute candle, it doesn't take me 5 minutes to understand where the golden zone is. It takes me 10 seconds. Watch. Okay. So how do I do it? I grab this tool. You guys, this is one of the greatest tools ever invented in trading. How many of you guys know this tool? This is the Fibonacci. Okay. It was invented by an Italian mathematician, Leonardo Fibonacci. Okay. Handsome Italian man. He likes to eat pizza. He drinks red wine. And he knows a lot about mathematics. Okay. Now, these are actual math numbers. Why is gold not moving, guys? Gold is not open right now, okay? Gold's not open. See, gold is closed, and we're doing today's charting and education. Believe me, who gives a shit about gold moving right now? Because gold will move on Monday, but now you're going to know how to trade it. So don't worry about why gold's not moving right now. You move with me right now. Right now, you're moving with Ron. You're not moving with gold. You're moving with me right now, okay? You're going to learn a lot. If you stay focused, okay, this is where a lot of traders, they lose focus. I'm going to teach you a skill that's going to change your life. If you're down with that, listen, pay attention. If you're worried about gold, don't worry about it. Okay? So worry about this right now, the Fibonacci tool. Do you guys know how the Fibonacci works? Have you guys ever heard of what is a permutation? Now Ron's using these big fancy mathematical words. I'm not a smart guy. Guys, don't worry. I'm not smart. But one thing that I did specialize in school was math. Math became one of my strongest subjects, and I love math. I don't know. It's like solving a puzzle. I love it. Math is, I teach my kids. I just walk with them and I'm telling them 6 times 7 and they get bored with me. But I just want their brain to just think fast and make snap decisions, okay? So math, guys, if it's not your strong point, math, make it your strong point, okay? I'm telling you. And I'll teach math to you guys like I'm teaching a kindergarten, a grade 1. Math is very easy, okay? You add 1 and 1 and you get a piece of the puzzle, right? So this is, we're measuring the entire move and it's discounted prices. It's like if we're buying things on sale, okay? So if we know what the price, again, is $5 and $10, this will tell us exactly within seconds that the 50% is 7.5 or $7.50, how you guys were doing in your head. But when we want to do it fast, we got to know exactly. And then the golden zone, okay? You see the 0.5? It's right here. And then you see the one line above it is 618. That's called the golden line. And then the line below it is the 382. Okay, this entire zone right here, that's what's called the golden zone, golden ratio, hot pocket, cheese pocket, whatever box you want to call it. Again, the names I don't care about. Well, whatever you call this, you call it whatever you like, okay? I just want you to understand where it's represented. And now I'm going to take math further. If I asked you guys, what's 1 plus 1? What are you guys going to say? Okay, I'm not tricking you guys. I just want to teach you guys permutations. 1 plus 1 is 2. Follow me, okay? I know it starts off easy, but it's going to get really complicated. 1 plus 1 is 2. What's 2 plus 1? 3. 3 plus 2 is 5. Come on, guys. You got to be faster than me. You got to already know the next one before me even saying it. 3 plus 2 is 5, right? 5 plus 3 is 8. 8 and 5 is 13. 13 and 8 is 21. 21 and 13 is 34. You see how I can continue to go? But now it's going to get difficult. Okay. Once you start going up into the hundreds, it's going to start getting a little harder. Okay. So then we need a calculator or we need a Fibonacci. Now what the Fibonacci does is it gives retracements. So if you take those numbers and you divide them, like 21 divided by 13, you're going to get a decimal, one of these fractions, one of these ratios. You're going to get something that looks like a 23.6. You're going to get something that looks like a 38.2. You're going to get something that looks like a 61.8. You're going to get a ratio like a 78.6, okay? So this eliminates all of that, okay? We don't need to do that in our head. It's already done for us. All we got to do is learn how to plot it, okay? So this is the zone that we're interested in on a structural candle. Am I interested on 786, 1.618, 236? You can leave those ratios if you like, but that's not the point of learning what a point of control is, okay? So now what I do is, if you want to just have the point of control on your Fibonacci, click on it right now. Let's all click on our Fibonacci tool. I have it on TradingView here. You can have it on your platform. I click on it and I go to style. See how it now gives me all of the ratios? I have clicked 0, 236, 382, 0.5, 618, 786, 1, 1.6. I can click 2.618 if it continues to go, 3.618, 4. And these are like, it will tell you support and resistance areas. Okay. If you just learn how to do this, you're going to learn where are nice support and resistance levels. And they're like psychological levels. Why? Because they follow mathematics. Okay. They follow. That's where the orders will be placed, okay? Now, if I don't need the 0, I unclick it. I told you guys, I don't need the 23.6. I need the 382, okay? I need the 382. I need the 0.5 because that's the cut line. I need the 618, that's the golden line. Those three numbers complete my golden ratio. I don't need the 786. I don't need the 1, and I don't need 1.618. You guys got it? So now, all I have checked on my Fibonacci are these three numbers. Screenshot this, guys, and put this on your Fibonacci. I'm telling you, this will tell you exactly where's the point of control of every structural candle. And I guarantee you, you will make money. You will make a trade, profitable trade by just following this. As long as you can follow what a structural candle is, okay? And if you do this, you're on your path to success in trading. Okay, but you got a lot more to learn. It's not just this. You got to learn risk management. You got to learn trading plan. You got to learn how to have a goal, and you got to learn patience and discipline. So there's a lot more to teach. Okay, now that I have that, you see now, look at my zone. It eliminated all of those other numbers above and below. All it has now is the 0.5, 382, 618 right there. Okay, now what I'm going to do is I'm going to apply it on our structural candle. This morning at 9:45, okay? Now, watch how I do it. Grab my Fibonacci, opening price, and I drag it all the way to the closing price. Bada bing, bada boom, okay? Now, look at Ron. Look at the white line where I told you guys, I'm guessing that that's the half. See how good I'm getting at this? Because I do this every single day, okay? So look I was spot on. And I've smoked enough weed today where my eyes are a little bit red and I can still be spot on where the 50% is, okay? Now you see how it automatically lets me know the point of control of that candle. You guys got it? Do you want me to do that again? Did you guys follow that? Samuel, you guys... Math is the universal language. Absolutely. And you know what the universal trading language is? Learning price action. If you learn price action, it doesn't matter if you live in Africa. It doesn't matter if you live in Asia. It doesn't matter if you live in the Middle East. It doesn't matter if you live in Canada. It doesn't matter if you live in Europe. It doesn't matter if you live on the moon right now. If you understand price action, it's universal, okay? Anyone can learn this. Now look, did you guys want me to do that again? Or do we got that? Can we move forward? That's the point of control of this candle, okay? Now, what I do is I complement the point of control with the body of the candle. If the candle is a bullish structural candle, I make the point of control green to illustrate to everybody that it could potentially be buyers, okay? See, could be buyers. And what I do is I stretch it into the future. Why do I stretch it into the future? Because you see that big body candle that closed, the first candle that came down, that was a bearish candle, and it found pending buyers right here, right there, and right there. And the market kept going up. It has not came back into here. So institutions are not FOMO buyers like you and I. They don't trade on FOMO. They place orders strategically in the market at these locations. At some point in time, when the market comes back down and revisits here, it has a, listen to the language now I'm speaking, it has a high probability of picking up pending buyers, delta positive volume, somewhere inside this green box. It can be right at the top, it can be right at the middle, or it could be right at the bottom, okay? And higher probability that it picks those pending orders up that want to be part of the next run, but they've been waiting. And once they get filled, then the market has a high probability of going back up, okay? Do you guys understand that? But I also want to clarify that it is not always 100% guaranteed to do this. You guys understand? Trading is not guaranteed. If it was guaranteed, I would tell you it is guaranteed to do this. It is not guaranteed to do this. It could do this, where it comes down exactly how I have it on that previous arrow. It comes down, it engages right there, and right there. However, there could be more selling pressure coming from higher time frame and go through this zone and potentially close below it. And then that shows me that the sellers have more control. And then that point of control could turn now into offers, where more sellers now are coming in that zone. And those buyers who were previously there, they're canceling their orders, and they could be placing their buy orders at the next supporting area down there. Do you guys understand what I'm saying? Okay, I said this really fast. Maybe this one I need to repeat. Do you guys understand those two scenarios? Because when you understand this, then you're going to understand how this point of control zone works. Okay, this is a zone where it's showing me where more orders are placed in the market, with an emphasis that they're buyers. However, now I'm putting capital letters, however, listen to what I'm saying. If it comes down black, very bearish, and does not do this, what this arrow does, sellers could come and close below. Then when it comes back up, there's going to be buyers buying the dip, right? Coming right back up. And then when it comes into the zone, what I do is if that candle closed black below, the same zone, I don't change. Look, I don't change how big it is. I keep the zone the same zone. We've already calculated the size of the zone. Now all I do is I change the color to represent that it could have delta red volume, more sellers. Now, when it closes there, you know, let me show you guys illustration. Okay, let me do it like this. This is how I taught myself this, okay? I'm going to teach you how I taught myself this. I know it might be a stupid way, but I learned how to do this, and it started to make me money over time, okay? So, follow me, okay? If you guys can follow me, remember, I told you guys, uncut a day off today, and I smoked enough weed. So, when I smoke weed, then we get good education classes. Think about when this candle closed above, remember what I said? There could be a green buyers there, pending orders, green here. There could be green buyers right in the middle, and there could be green buyers right in the bottom. And then remember what I said? Zones can also have sellers as well, because if the market comes into here, maybe sellers want to continue pushing it down, right? So there's going to be both buyers and sellers in a zone. All zones, no matter what you're trading, That's how you make a transaction. There's got to be both sides, okay? But we're looking to which side has more delta, okay? So when we get that big structural candle closing above, then what we do is we wait for a retracement to come back in, transact with this green line, transact with that red line, transact with this green one inside here. And then what we look for is a high probable move that continues to move up like this. You guys got that, okay? And if that's like an option one, could come in, give us the official retest, pick up all those pending buyers, and then move up. That's great. If we get in a trade like that, we're looking to maybe potentially take a buy. We could place our stop loss. You could be really tight below the entire zone, but if it just comes down a little bit with a wick, you see sometimes how I place it below there. Sometimes I get stopped out and miss out on the move, but sometimes I'm good, right? That's if you really want to manage your stop loss. However, if you want to place it below the opening candle or below that big strong candle that opened, below the wick, that's a decent place to place a stop loss. Some traders go below the double bottom, right? Depending on what reward you're looking. I'm just showing you where stop losses could be placed, but this is not a class on stop losses. We'll save that for another time. But when it comes in here, picks up those buyers, it could go up. Okay. But what I was also saying is if it's coming down, right, to come into the zone, now that it's transacting in here and going deeper, 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 then maybe some of these pending buyers are seeing that it's coming down really black and heavy, then all it takes is a cancel. A pending order is just an order waiting to get executed. It's just sitting there. You can cancel. How many times have you guys placed a pending limit order in the market? You can cancel it at any time. And when you cancel it, what you're looking to do is reposition somewhere else. So if these buyers see it coming down, they don't want to buy here. They want to buy deeper in the depth of market. They want to get a better discounted price. They might want to put their orders now below there, right? If it comes down there, maybe we'll pick them up there and then go back up, right? So when this is happening, when it's coming down, some of these buyers could be exiting this zone and placing their orders in another zone, right? Same thing when we're going into, if it's a bullish and it's going into a red box, the sellers could be canceling their orders and placing them higher to get filled at a premium and then push the market down. So there's always this going on, right? And it's hard for us to see because we can't see inside the candle unless you have a footprint chart and you can see actually what's going on in there. That's a little bit more advanced platform. But just to keep it basic today is what we're trying to do is come back into one of these zones and go with the high probable setup. So if this was a very bullish bar, it closed bullish and has not came back into the point of control, it's got a high probability that it's going to be buyers in there. And I'd rather trade with high probable zones or setups than just trade in no man's land, right? I have a better opportunity of being a successful trader by trading high probable setups with proper risk management, okay? And let me tell you guys, you can be a 50% trader, 50%. You could get trades 1 out of 2 times. You only have to be right once out of 2 times. With a proper risk management, like a 2 to 1, or 3 to 1, you could make money over time. I'm not saying 50% is a good percentage. You want to be around 65 to 75% with your trading. If you're waiting in high probable setups, that's very achievable, okay? You could make 6.5 to 7.5 out of 10 trades correct by waiting patiently in these zones. With the proper risk management, your account mathematically will continue to compound. As long as you stick with your correct stop loss and you don't get carried away one day or you revenge trade and you give it all back. If you continue to do that, your account is like a snowball. It starts very small. And then once you start rolling that snowball down a hill, the snowball will get bigger and bigger and bigger. It just accumulates more and more snow until that snowball is massive. So your account, think of it like that. It might start off with $100. It might be a very small snowball, your account, but trading with high probable setups, trading with proper risk management, yeah, your account might grow slowly from $100 to $110 in 1 week. That's okay. You still made 10%. That I talk in percentages. I don't talk in dollar figures. Because $10 a gain on a $100 account is a big. It might not look like a much because it went from 100 to 110, but that went 10%. What happens if you did the same thing with a $100,000 account and it went 10%? That's a big big money. That's $10,000. But you got the same percentage as the trader with the smaller account. Okay, so you want to look over time how to build your confidence, build this. Eventually, maybe that account will turn from $100 to $150, maybe to $200. Maybe it might take you 1 month to do that. But then eventually when you start to get the hang of this, it could be like that snowball growing from $200 to $400. Then eventually maybe to $1,000. Then after 6 months, maybe you double it and take it to $2,000. But you could continue to grow it. And I'm not saying you could grow it with that original $100. If you learn what you're doing, maybe you have $10,000 waiting in your savings account to put into the market and trade that. Maybe some of you guys say, Ron, I want to go do a prop firm now. I've learned how to trade with my $100 account. Now I'm ready to take on a $10,000 prop firm. And then you can start to really make some good profits, okay? Now, what we're doing now is to continue with this zone is stretch it into the future, okay? So first thing I do is alert system. Remember, we talked about this. TradingView has 80% off this long weekend for Easter weekend. If you guys have not upgraded on TradingView, I love TradingView because it's a great charting platform and it allows me to use alerts. Alerts make you money, okay? Because all you have now guys, please, if you can listen to what I'm saying, I pray to God that what I'm saying in my language can get through to you this weekend, because if you learn how to place alerts in these structural body candles at this point of control, you will allow the market to come to you naturally and give you an alert when it comes here. And remember what we're doing. We're patient, we're disciplined, we're waiting for high probable setups. You know, when we get on a live session and we only have 2 hours to trade, I might rush a trade, but it's not a high probable setup because I want to take a trade with you guys. But if I could do this for 24 hours a day and just figure out these zones and place alerts and go on with my day and not stare at my computer all day, life is good, right? We all have busy lives. We all have, some of you guys go to school. I went to school. I was trading as well while I was in school. Some of you guys have a family. I have a family too. I've learned how to trade with a family. Some of you guys are across the world, right? I'm across the world too. We can figure out what session to trade by this system, by setting your charts up with alerts and then allowing the volume naturally to come in there. Then when it comes in there, you don't trade blind, but you watch for your confirmations. You watch for your clues, right? You watch for maybe a double bottom inside here. Then you know that the second bottom has traditionally more volume. That could get you set up for a buy, right? So what I do is, you can set an alert, right? You can right click it, add an alert. So you see this white line? I've created now an alert. So if gold ever, whether it's tomorrow, next week, next month, if it ever comes back into this zone, I will get alerted. And I trade off my mobile as well. I have TradingView on my mobile as well. So I get a mobile alert. I don't have to just sit at my computer station all day. I could be at a baseball game and I'll get an alert at the baseball game and I can trade off my mobile because I know exactly the candlestick formation, what I'm looking for, right? And I just go to the time frame I'm comfortable trading, okay? So now that we set an alert, you can set, this is where now I get questions. Someone says, Ron, do I set the alert at the top, in the middle, or the bottom? Okay, this is all your personal preference. The best is to set it right at the top because when it comes up there, or comes down here, sorry, right there, you're alerted, okay? Because sometimes it just comes in here and will bounce off, okay? But if it bounces off and comes deeper, maybe you could get the retest and then do something like that, right? But wherever you place it, just make sure you're either at the top, mid, or bottom, okay? I kind of place it right in the middle. I don't know why, just 50%, right? Okay, now, gold is trading up here. I know the market is closed, okay? Gold is closed right here. There's where it closed, okay? Now, will gold ever come back down into that point of control of that candle? I don't know. Okay, it might continue going up forever and never come down here. Okay, but if it does, if it keeps going up, guys, this is where I want to really teach something. If gold keeps going up, what happens to this zone? Okay, I'm going to get rid of these so you guys are focusing on that zone. What happens to the point of control? Listen to what I'm saying. What happens to the point of control of this candle, of this box, if gold keeps going up, okay, and has not came into this zone. What's happening in here? Anyone want to take a wild guess? What's happening inside this zone? Guys, this is interactive learning. I need you guys to help me out, okay? I know the answer. I need you guys to help me with the answer. Timmy, it will come back eventually. Okay, yes, I understand it may potentially come back eventually. But my question is, sorry, maybe I didn't explain the question. The question is, what if gold keeps going up, making higher highs and higher lows, and has not revisited this box? Do you think this box is just sitting here doing nothing, or is it doing something? Is it a fair value gap? Okay, so like Timmy, you're asking me if it's a fair value gap. That's not the question I'm asking. Is it a fair value gap? What do you guys consider a fair value gap? A fair value gap is from a wick to a wick. So from the first low wick right there, see that first wick right there, that first wick that came and went back up. So if I drag it all the way down to the next wick, this is what is a fair value gap. Okay, I'll make it so you guys understand. This is a fair value gap. Okay, but I'm not talking about fair value gaps right now. But if we want to talk about a fair value gap, let me just explain what a fair value gap is. Do you guys understand that that's a fair value gap? What did I just do there? Tim, what did I just do there? How did I find out that fair value gap? What did I do? You see this wick, the first candle, okay? After that closed, it came black, 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 and stopped right there. That's a higher low, okay? And it has not came down here. And then you see this first big blue candle that came up right there and got rejected right there. So see how I plotted the green box from that wick to that wick. This entire blue volume has not been transacted. That is technically the fair value gap. But you see the zone that I have inside? That's the point of control of the fair value gap. Does this make sense? Okay. This entire green zone above me is the FVG. Here's the okay, this is FVG. Timmy, I'm picking on you, Timmy, because you asked me the question, and I'm gonna make sure you walk away this session knowing exactly what is a fair value gap. So fair value gap is here, fair value gap is here, and let me amaze you guys. And this is a fair value gap. Do you guys understand that this entire big green box is a fair value gap? Okay, the only difference, what I'm trying to say is this zone in here is the POC or golden zone. Tim, were you on the call when we started from the beginning? Remember when I was asking the question, if something costs $5 and $10, what's the best price? Okay. It would be right, it's in here. This would be the golden zone. But if something was $5 and $10 and you told me $9, $9 would still be up here. If you told me $5 and $10 and I said $6.50, it's kind of down here. This is kind of just right in the middle. So this entire green box here is a fair value gap. Everything we're looking here is a fair value gap. Okay. But this is where the point of control is. That's the golden zone of this volume. You guys got that? Good question. It's a great question. I'm sure some of you guys maybe add this question. Fair value gap is wick to wick. Yes, you're correct. The wick right here. Guys, what are we not understanding? See that wick right there? That wick and in that previous high, that wick right there, right? This candle just exploded right through there, right? And closed above there. And then the first time it came down was right there. So all of this volume in this candle has not been transacted. Do you guys understand? Or maybe I'm not teaching a fair value gap correctly to you guys. Maybe you guys are learning it some different way. Teach me, guys. I don't trade too much with fair value gaps. But what I understand is, when I understand volume in candles, that's one thing I understand. I don't understand all the other shit you guys are trading. But I see that this was a blue candle right here at 9:30 Wall Street. 9:30 came up. That's the resistance. It got pushed down. And then you see when this candle exploded right through there, filled it, drove all the way up there, closed, and then the first black candle that came down stopped right there. So all of this volume from right here to there has not been transacted. You guys say mitigated and all those other kind of concepts and shit like that. You guys are, but you see, it has not been traded in here. Okay. And then what I did was I took it further. I found the opening price, closing price, and I found my POC golden zone. Guys on Zoom, I need you guys to understand this. I'm trying my hardest with you guys on YouTube, but I know that the guys on Zoom also need to know too. What I do here is I focus on this. Okay. If you guys want to stress yourself out with the fair value gap, you guys go ahead. I don't care. Okay. Just understand what you're looking for. This entire green zone is fair value gap. Even the point of control is fair value gap. But I showed you guys how to identify the golden zone point of control. You guys do what you want with this, okay? You guys do what you want with it, okay? I'm just trying to show you guys something. Whether you guys want to learn from me, doesn't hurt my feelings, but I want to break it down that this entire thing is a fair value gap. But when you know the point of control, you can take your trading a little bit further, okay? I don't want to spend my entire call on this. Okay, but what we got to do now is we got to continue stretching this into the future. And you see, okay, my original question, sorry guys, Timmy, but I hope that I answered your question, okay? The original question, what I was asking guys, this is where sometimes if you don't understand my question, I'll give you guys the answer. My question was, this is where I need you guys thinking, okay? I need you guys really thinking. If gold keeps doing this, going up, pulling back, going back up. We're all the way at almost 5,000. This block is still in the market, okay? It's still active. If you have a depth of market, you're going to still see that block in the market. But remember, it's pending. So it could be getting, as the market keeps going higher and higher, there could be more and more pending orders entering the zone. Keep building it. The further gold moves around, like away from here, the stronger the zone gets, right? Because why? Because it's a depth of market. It's getting, this zone is getting deeper. You know, like guys, if I did it like this, wouldn't it like this down here? Wouldn't it be nice to buy gold all the way down here? Who wouldn't want to buy gold at 4,100 right now? Okay. Gold has not visited 4,100 since March 23. It's April 2nd today, okay? So, but that's a zone right there, right? If I stretch that into the future, watch what I'm doing here, Timmy. Timmy, I'm picking on you today. Always on some of these education class, someone who asks a question, they get picked on, okay? And I'm picking on you because if I can get through to you, I'm getting through to everybody on this call, okay? I'm not doing it, Timmy, to single you out. I'm not doing it to disrespect. I'm just doing it just to make sure that you're understanding this, because I want you to be the best trader in this group on tonight's call, okay? So there was a time when gold came down here and moved away from this. Look at the most recent pullback right there, was a higher low, okay? That zone is still there, okay? It almost came back in. So this zone now, as gold is moving away, this zone is still getting, it's deep in the depth of market. I'm telling you guys right now, if gold comes down to 4,000 or 4,100, I would love to buy gold, okay? I'll tell you guys straight facts. If gold revisits 4,000, I'm telling you, I will be buying gold. I will have a pending order at 4,000, 4,100. I want to buy gold because gold is trading, last time I checked, at, what's it trading at? 4,700 today. That's getting gold on a $600 discount, okay? It's much better. I could buy it at here, but I could buy it there, or I could buy it at the lowest price. That's a proper discount, okay? So this zone is getting stronger and stronger and stronger as gold keeps moving away from it, okay? Because there's a lot of, not me, but there's financial institutions that want to buy gold. Imagine buying gold back at 2,000, okay? If gold revisits 2,000, I guarantee you a shit ton of orders are waiting there to take it back up. Same with like Bitcoin. Okay, Bitcoin hit 126,000 all-time high. Right now it's trading around 65, 70,000. But if Bitcoin came down again to its original double bottom bounce that took us to 126,000, you guys know that that's $15,000. If Bitcoin revisits $15,000, I guarantee you there's going to be a shit ton of pending orders waiting to buy Bitcoin at 15,000. Bitcoin is nowhere near 15,000 right now, but there's probably orders just sitting pending in the market. It's like winning a lottery ticket. Let me explain it to you that way. It's like winning a lottery ticket if you get filled at those extreme low levels, right? It's like our original analogy where we used if a t-shirt is $5 and $10, the fair value, the $7.50. But if I could sit there at $5 and get it at the lowest price of $5, and I sit there with a pending order and I'm waiting 1 month and the t-shirts come down and fill me at $5, I'm getting the absolute lowest price. So there's probably some pending orders at $5 waiting to get hit. It's not a high probable it's going to come down there, but if it does, you get filled at the absolute bottom, right? So what I'm trying to say is as gold kept moving, it made a higher low there. It made a higher low there. It made a higher low there. This zone is continuing to get stronger and stronger as we diverge away from it. That most recent low right there. And you see where we're trading at like currently right now. So what I was alluding to with our zone that we just figured out here, if gold keeps going, this zone gets stronger and stronger and stronger. Then eventually when it comes down in here, that zone is full of buying pending orders, and then it comes in there, picks them up, and it's like a wick and a rocket right out of there. Okay. Sometimes you'll get filled with minimal to zero drawdown. How many of you guys, and I'm not asking you guys, okay? So then you guys now, testimony from you guys, everyone on YouTube and Zoom. Have you guys in the last, let's say 3 months, figured out a structural candle, found the point of control, put a pending order in there and waited? And when it came down in there, did you get executed and did you go directly in profit with zero drawdown? That is a very specific question I'm asking. Okay, listen to the question again. How many of you guys have done this and it came right to you, picked you up, and you had minimal to zero drawdown and you went directly into profit? I have had that happen to me. Okay, I'm the first one to say yes. It's a testimony from me. Okay, have you guys had that happen to you yet? Yes or no? Don't worry. If you haven't, you're not hurting my feelings. It's just I want to know probabilities here. How many of you guys? Okay, David, yes, you have. Samuel, yes, you have. That's 2 people that are telling me that waiting in this location, setting a pending order, and when the market comes to you, picks you up with minimal to zero drawdown. Listen to that again, okay? When we're talking about risk management, I would love to take trades all day, all night with zero drawdown and go right into profit. What else do we want to learn about trading? Who doesn't want to do that? Okay, so if I got, and I'm reading the Zoom and YouTube. Okay, guys, I'm not paying you guys to say this. I got David, Samuel, iPad, and David, you was in the buys at 9:45. Guys on YouTube, I see Cleveland, yes. Tim, yes, happened to you. Vin, happened to you. Zizo, yes, and fly so fast. Okay, so now you guys are confirming what's going on in there. Okay, so the market is coming because you guys are these green lines waiting to get picked up. And when the market picks you up, you guys are going directly right into profit with no drawdown. So that's what we call a sniper entry. That's a sniper entry. You kind of, you shot that candle at the wick, the lowest possible point at the best value, and that's it. I don't need to say anything else. And then when you start going into profit, the only thing that you have to do is either figure out what type of plan you have when you go in profit. Are you using a trailing stop loss? Are you using like whatever? Are you taking partials? That we'll do that on another call. I want you guys just to focus on this stuff right now. Okay. So what we're going to do is we're going to keep an eye on gold. And if it comes back in here, we're going to see what happens in here. And remember what I said. It's not always going to do that. Because if it comes down fast like this, black, and closes below, it could turn red and then drop. And one other thing I want you guys, before we end this call, I don't want you guys just leave. I want you guys to know, you guys know what liquidity is. What is liquidity? That fancy word that everyone talks about. I'm gonna make this capital letters, like I'm shouting at you. Liquidity. Hopefully I spelled it right. What the hell is liquidity? I hear every trader saying liquidity, liquidity, liquidity. This is liquidity. See this Gatorade I'm drinking? I need some liquidity right now. Oh, this is some good liquidity. G0 Iceberg Blue. If you smoke a joint, this complements a joint so good. Guys, for all my weed smokers, Gatorade Zero Blue. This shit goes perfect when you smoke a joint. That's good liquidity. Okay, liquidity is orders waiting to get executed, okay? And they could be stop losses, they could be anything. What it could, and clues now, okay? So are we always going to get a move that just comes down naturally right into the green box and just goes out? Yes, you guys seen from some of you guys in Zoom and some of you guys on YouTube, you guys said yes, it picked you guys up and you went straight into profit. However, that doesn't always happen. Now, let's talk facts. What could happen? Have you guys ever seen this move before? Where it's a big black candle coming through here, activates all of those orders. Remember, there's red orders, green orders, red orders, green orders. Breaks down impulsively. Impulsively. Let me write down another fancy word here because we're learning today. How many of you guys have heard of this word? Impulse. What the hell does impulse mean? Imagine English was my second language and I have no idea what liquidity or impulse is. Okay? So, to those that English is not your first language, okay? No issues. Ankh is going to help you understand this, okay, in my own way, okay? An impulse is just basically really easy, a candle that breaks below a structure without closing. That's it. It has not closed. And you know when a wick forms on a candle? It forms because there's a rejection prior to the candle closing. And some of us, we trade impulse moves because we're not disciplined and we're not patient to wait for a candle to close. So if we go in, the candle has not closed. Remember, it's no confirmation. So if you're trading with impulse, you're trading with no confirmations. Remember how we started the call? The confirmation. An impulse gives us no confirmation, okay? Now, when we come down here, what can happen is it comes down there and has not closed, and then it's a wick. Let me try and do this like this. Watch. Let's see if Ankh can do something. How the hell do I make this black? 1 second. Give me a minute, guys. Watch. I was doing this with my daughter earlier. Let's see if I can do it. Okay, look. This is a big black candle. This is a 5-minute candle, okay? It opened ignited bearish. Look, it's got no upper wick. It's coming down black, black, black. Normally, what I'm looking for is a wick. I'm looking for a wick in this green box. Remember, I want to see if it triggers those pending orders, picks them up, and then it will be displayed with a wick, and maybe the candle comes back up and it flips blue. Right? But what if this candle is coming down, ignited bearish, boom, boom, boom. Ron said, if it comes in the green box, we're going to buy and we're going to buy Lamborghinis. But if it comes through, and what happens if let me just show you, if it closes, then what I do with the zone is I really fast make it red. Because then remember, all of those orders can be getting shuffled around and more offers. Now those green lines can be coming down lower. They can get canceled because now they want to get filled out lower. And then it comes back up, blue, 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 comes in there and gets rejected. Then we go down, okay? Now, what Ron was saying on an impulse, okay? So a candle can come down. This is a 5-minute candle. It's coming down. There's 4 minutes left in it. 3 minutes, it comes in here, catches a wick, it goes back up. It's a hanging man candle. Notice how it's still holding that head of the candle still. And then 2.5 minutes, 2 minutes left in it. It's coming through. Then it breaks with 90 seconds to go. Then it finds a wick down there. And then it's got 1 minute. Ron always says, follow the last 30 seconds of the candle. And then now all of a sudden it comes back up and it closes right there. Okay. How can I make a wick on this candle? Let's see. Give me 1 second here. Okay. This is a wick. That's a wick. Okay. I know it's an arrow, but it's a wick. It's a ghetto wick. Okay. So it came in and then it came back up and it closed right there. Is this zone, what color is the zone? The color of the zone is still green, right? Why? Because the candle came back up and closed above the zone, right? It came down there. Now I see a wick. It came down there. It triggered all of that liquidity and picked it up and came back up. So that's the clue I could be looking for. Now, all I need to see now is maybe the next candle opens black again and then comes back down, right? It's black again. Black, black, black. Maybe picks up a higher low wick right there and then comes back up and then flips like a blue hammer now. And it could be time to potentially take a buy. Why? Because now I can see that it's got the higher low wick right there, right? And now it came in there, spiked the liquidity, but we're not selling on impulse. We're waiting for confirmations. Then it came back up and it closed above the green zone. So now I know it broke. It grabbed the liquidity and then the buyers brought it right back up. And now I could be advancing to buy the candle. That's when I go into a buy and then I'm looking to take it wherever my reward is. And my stop loss could be right below the liquidity wick for a safe, tight stop loss with risk management. Yes, better to place your stop loss bigger, but that's a good area because now we have evidence it came down there, it got rejected, and then it's ready to go after it made another higher low. So that it picked up more green lines in there and then it's ready to go. Okay. You guys understand what I'm saying? And then that liquidity is a clue that we got all those pending orders. We got the money down there. We got all the stop losses. The market came down there for a specific reason. It grabbed all the money. Now it's ready to move the market back up, right? The market is very efficient. It knows what it wants to do. It will not leave any orders behind, okay? How can we see this? Because you can just go back and look at some structure. Like right there, see those long wicks came down there, grabbed the liquidity, came back up, kind of closed. That it built that leg off of grabbing liquidity, right? I know I'm just cherry picking right here because this is the most recent one, but you see right here, like let me show you an example right here. There's where a black candle came down, it came back up and closed right there. Remember what I told you, closing price, opening price. There's where it opened, originally it was black, higher low, came back up, closed inside. Then it advanced blue, blue, blue. They slammed it back down. Look at where all the bodies are hanging around. Right by, look at the price, 4,600, exactly. Psychological numbers. Then I see again, it came back down, seller, but it did not fill that wick to go even lower. I got a higher low, again, closed positive. Look how many retests we had here. So then there's like a Tetris piece. You can look at this as like a double bottom, one bottom there. There's your double bottom and there's your breakout right there. You have lots of support. You got higher low, higher low, higher low. You got structure. And then that is where maybe you possibly look to buy. Right? What more evidence do you want on that move right there? Okay. And then, so going forward, we learned a lot today on some different stuff, but what we could see, and then when I'm drawing my arrows down, I'm looking for either a break, come back in and retest this, then you're going to buy. If it doesn't do this where it just comes in and goes up, it might break it and then come back up and close above, and then it's still a valid buy, okay? The only third option is, again, with the sellers. If the sellers close it below, then the zone turns red and then could potentially push down further. Okay, so let me just clean all this up, and then I just want to make sure that we now understand structural candles. And then what I want to do is I just want to show an example, okay, of this was a structural candle. Okay, just look at the size of it. Number one, look at the size of it. This candle, is it anywhere the size of these ones? No, it's massive, okay? And when you see that, okay, even if you miss out on a trade, okay, it's fine, but you have a job to do. First thing is, when you see an abnormally large candle, ask yourself, did it close below like a pivot level? You see right there where it was support, 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 and then it went back up. Did this black bar close below that? Yes, okay? Just simple yes, okay? Is it 3 times, 4 times, 5 times bigger than all of these other candles? Yes. Can we find the point of control and cut it in half? Yes. I taught you how to make the Fibonacci. Look, now I know I'm cherry picking, but if this was live, I would have done the same shit as you would have too. Can you look at 50%? Yeah, it's right there. We're gonna say it's sellers. Why? Because that's a big bearish candle. Okay. Can we find the point of control of that? Yes. I'm going to make it red to illustrate now a selling situation and not a bullish candle. I'm going to do the same thing with now a red candle, bearish candle. So you see, now you see when it came up, look, this candle came blue, 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 right exactly at 50% in that point of control and pushed down. Again, if you were waiting there with a pending order in that point of control, you went into profit with 0 drawdown, okay? It came right in there. If you were just sitting there waiting with a sell, try it on a demo account, guys. Try it on a demo. Just open up a demo account and just practice next week. You might gain your confidence, okay? And you might learn a little bit. That would have taken you 130 pips right into profit. If you held it or trailing, I know this was when Donald Trump was speaking, but it does not matter. Structural candles are structural candles. If this was NFP in the first 5 minutes, I do the same shit. If this is Wall Street Open, I do the same shit. If this was futures market, I do the same shit. If this is a 5 minute, 15 minute, an hour, a 4 hour, a daily candle, I do the same shit. I stretch it into the future and I set an alert. See how quickly it came right in and then went. But again, in the future, this zone is still there. It could be strengthening with selling orders. Could be strengthening, okay, until it eventually comes back in there, okay? What I do is I stretch it into the future. You see, gold is right here. What happens if we open up next week? It comes right back into that zone and it goes right back down, okay? That could happen. What happens if it's what I just showed you? What happens if it's an impulse, big blue candle, break out of there, and then it does not close above there. It gets a wick and comes back down and closes below there, and it comes back in. It could do the same direction, same shit. But now what I see is it's a impulse. They spike the liquidity up there. They closed it back below. More sellers are coming back in here, and then boom, they push it down. The only other third option, no, don't spam. I don't speak Hindi. Stop spamming. It just pisses me off when someone spams. We've had an amazing call until Suji, you started spamming. Stop. I do not speak Hindi. I'm speaking English right now, okay? That's it. I just answered your question. Stop fucking spamming 100 times now, okay? This is where I get pissed off and we lose focus, okay? No, I don't speak Hindi, okay? I speak the language of price action. Look, now, listen, in English, Hindi, whatever you want to listen. Look, if this is a bullish candle breaking through here and it physically closes above. If there's anyone in the chat that speaks Hindi, explain it to that gentleman in Hindi right now. You guys explain it to your friend. If it closes above and comes back into this zone, this could be a green zone and it could be filling with green buyers and invert this. And then it moves up, okay? Those are the rules you need to know. As a beginner trader, if you understand these rules right now, I can tell you, you will improve your trading. I said you will improve your trading. I did not say that you're going to become a millionaire. I did not say that you're going to become the best trader. I'm saying that it will improve your trading, okay? You will now understand how to trade higher probable A plus setups. Okay, and then when you understand patterns, if it comes in there and does this and and it's a double top, you know that a double top at a specific red zone. You guys remember that trade the other night where I got in early on that gold sell and then I got stopped out, then I ended the call, and then you saw when it came back up in that same zone, it got that big wick and then really pushed down? That was my impatience on that call. I forced that trade. We waited for 2.5 hours, and I forced it. Had I waited, again, I know it's after the fact, but this is how you learn. Had I waited, the second top had a massive rejection wick, and then that's where I could have got in the sell and got right into the money, okay? But you got to understand what could happen, right? Also, if it's a double top with liquidity, what happens if it does this? Comes in, goes back down, breaks out impulsively, come back in. It's still like a double top, but it's more like a head and shoulder. Okay, it came in one time, got rejected. It came in, did not do this pattern, double top. It broke out. Okay, grab. That's what a head and shoulder pattern is, guys. A simple head and shoulder is the liquidity grab. What I'm trying to explain to you guys, okay? And then it got rejected and closed again below the red zone. It comes back in. It's exactly like this, like an M pattern, but it's got this head that's sticking out because now it gives you more of an A plus setup because now this one did not grab liquidity. This one did. So this one has a higher probability of going down. Either one of these is, I would be maybe selling right there, stop loss above the head, the liquidity grab. You could go, if you really want to open up your stop loss, you could be above the previous high, double top right there. If you really want to open it up, and then you're getting your reward, trading right back into that volume down there, okay? If the same setup like this presented itself, again, I would be looking to sell either here or below the neckline right there and stop loss there. But you see, this one has the liquidity. This one does not. This one shows me that the red zone is still holding up, okay? And then the only other clue is you could break out of here and close above. And if that's the case, the red zone turns green momentarily. Because now, if it closes above, these like sellers could be now, when it comes back down, they don't want to be sellers anymore. So they're canceling these red orders, and then they want to be selling above these highs. Look at these red orders are getting, I'm canceling them. I'm literally canceling them. This is what's happening in the live depth of the market. If that happens, and then what happens in here, these green buyers that were down here, these green buyers that were waiting down here, now they have confirmations. They're coming in the order block now to take the position, to take the spot of those red lines. So then when it comes in here, they're patiently waiting for the pullback because they got confirmation. They confirmed it's not a fake out. They confirmed it's not a double top. They confirmed that the buyers broke through that zone and closed above. So naturally they're waiting to get filled, and then it could be doing that, right? That's trading in a nutshell, 101. This took me, guys, I'm being honest, took me more than 5 years to learn. And you guys just learned it in 90 minutes, okay? Yes, I could go much further into this, but this is like an introduction class, okay? We said it's education. Did this class help you with anything, okay? And then the other thing that I was going to do was a top-down analysis on gold. See, guys, that's why I'm saying, like, if you come to our website, and I'm being completely honest, I yap. I'm the yapper, okay? But when I yap a lot of value. If you come you get through our psychology mindset series. You get through all of our courses, okay? There's a shit ton of courses. Then you come into the boot camps. There's 5-day boot camps. We're going to do a stock and option 6-day boot camp. Then you come into the webinars, okay? You can see the beginner level webinars are, this one is 2 hours. This one is in 90 minutes, 1 hour, okay? They start to get much longer as we get more into advanced stuff. So if you move into webinar 30, 50, 80, 100, I break things down in hours, like how I just did. If we come in here, the more advanced webinars, look at what we can learn. session high lows and trend lines, psychology of over trading, wick analysis, zone to zone trading, trading with drawdown, what are static trading zones, what I tried to explain, importance of a trading plan in a journal. Some of you guys are over and under leveraging and lot sizing and need some help with that. Trading pair, matching it for a specific time zone. When in doubt, zoom out. Look at the bigger picture. What are dead cat bounces and bear traps? Don't marry a position in trading. Understand that if a trade is not going your way, don't marry it, close it. What is tape to tape trading? I tried to teach you guys this. When you're looking over here, sometimes we struggle as traders. We had a meeting, a whole team meeting. What can we do to go overcome this? Some types, look right here, order types and OHLCF candlestick. It's basically what we did today, but this is more of a bigger one. And these ones are, look, 2 hours. They're basically 2 hours. Some are even 2.5, some are 3 hours, but they're going to take a chunk out of your time. They're 2.5 hours, 2 hours. Fear and greed trading, 2 hours. Like, you need to have a lifetime just to watch these webinars. There is a shit ton of them because I break things down in detail and make sure you guys get the best education possible. I don't want to just do this in 5 minutes, because if you're investing time with us, I'm telling you, you're going to learn something, okay? And what I just want to do real quickly before everyone leaves, a top-down analysis on gold, okay? And then what I'll do is I'll give you guys my charts and you guys can keep it for when gold opens. Okay, so we just did this entire call on just, remember, this structural candle. So hopefully now, guys, you guys know what to do with a structural candle. You guys know how to cut it in half and figure out the point of control. We talked about the fair value gap. We talked about how to set the Fibonacci tool to understand this. We talked about order types. We talked about zone, resistance, supports. We talked about impulse. We talked about retest. We talked about all of these things, how to set alerts into the future. Now, what I'm going to do is a top-down analysis, okay, of teaching all of these things now, breaking it down from the daily down to the 5 minutes, like as if I was getting ready to trade. Now, you see this big black candle. Was this okay, if I asked you on the daily, what is a structural candle out of all of these bars? Which one would you guys say? Same question I asked you on that 5 minute chart. You guys told me that big blue one, and you guys were absolutely correct. If I tell you guys now we're on gold on the daily, which one of these candles is the most obvious structural candle? Everyone, 100%. If you paid attention to what I just taught, everyone should get this. This is where I know that everyone is paying attention. Which one is it? The black one. Which black one? I see this is a black one. This is a black one. That's black, 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 black. Okay? The big black one. Okay? This is a big black one. That's 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 a big black one. Be more specific. Guys, you know how you can do this? Just tell me the time, the date. Do you guys not have a chart in front of you guys? The biggest black one. Okay. Jove, how do you, am I saying your name right? Jove? It's Jove. Hove? Are you Jay-Z on the call? We got Hove on the call, ladies and gentlemen. Rock Nation. Correct, bro? Okay, Jove. Okay, what nationality are you, brother? What is this? Jove. Macedonian. Shopraish. My Macedonian brother, Shopraish. My man, my parents are from Skopje. They were born and raised. I come to Macedonia every summer, bro. We're going to meet up. We're going to go Lake Ohrid, Struga, my man. Okay, this is for Jove. He is right. Okay, the big black one. I assume it's this one. Now, when you guys, you want to take your education a little further, okay, dial in. This is where we stay focused. Jove, my man, is focused right now. When we see a structural candle, take a look 1 second to see the time and sales, time and date. And understand, did all this volume come, was it Wall Street market open? Was it futures market? Was it London market? Was it a news announcement? Did Donald Trump fart at this time? What happened to cause all of this big black volume? Okay. Now, look at it. It says to me Friday, January 30th. Okay. Guys, Suji, I'm sorry. I'm going to have to put you in timeout because we're all trying to learn here and you keep spamming. And it's really annoying. okay? And we have no moderators. So I'm going to be the moderator. I'm going to be the educator. I don't want to be the bad guy, but Jove is trying to learn here, okay? And you're disrupting our class. So I apologize, but we're going to put you in a timeout, okay? It's like school. You're going to get timed out 3 minutes. And if you learn your lesson, you're welcome to come back in. But we're going to time you out now to think about how to conduct yourself properly here, okay? So, Mr. Suji, my Hindi brother, you are in timeout, okay? You see, guys, how we have to conduct a call properly. He's in timeout for 3 minutes, like a 3-minute candle. And he's welcome to come back in, and hopefully he understands spamming doesn't help the situation. Jove is trying to learn here, my Macedonian brother. Okay, now, that's a structural candle. Jove, I'm picking on you. What do we do with this now? What do we do with it? You are right. It is a big black one. It engulfed this blue one, this blue one, this blue one, this blue one. It basically engulfed 1, 2, 3, 4, 5 bars. One candle engulfed 4, 5. Okay? So what do we do with that? Jove, if you don't feel comfortable, no worries. I can help you with it. But and it's late for you. Man, I got respect for you because it's got to be what, 2 a.m. for you? And he's learning, okay? So that is a big, massive one. Also, what I was saying is, guys, notice the date really quickly. The date. Notice it's Friday, January 30th. So it's kind of the month-end candle. A lot of volume at the end of the month, okay? Remember time and sales, okay? Understand that. Remember, we just had a month-end the other day. We have a new monthly candle that just opened up, okay? So first thing I do, Jove, is cut it in half. I try and guess where it is, okay? Half is probably right there. Now, we don't have to guess. We got to get our Fibonacci tool, opening price to the closing price. Look, I told you guys, Ron smoked a good amount of weed today. When you guys see when I'm dialed in, you guys know Ron is smoked, okay? When I smoke, my focus is laser focus, okay? I don't know why I'm saying this to everyone, but I smoke and trade, okay? I don't recommend it for you guys unless you've been doing it all of your life. Now, 50%, okay? That's nice. We figured 50%. Can we find the zone of this? Absolutely. There it is, okay? Now we go red. Can we go, Jove, into the future? Look, the first time, how many candles did it take to come back in here? It took 1, 2, 3. We're on the daily, so it took 3 days. You had to wait 3 days for it to come back in there, but it got rejected and pushed down, okay? If you were in a sell, you made some money. If you were looking for a bigger move, unfortunately, it came back into the zone, okay? But I stretch it into the future. Look, it came back in the zone, back down. But notice how it's making higher lows and higher lows and higher lows. So the sellers are trying to push it down, but the depth of market with the buyers is getting stronger and stronger and stronger. And then you see, has a blue candle impulsively broke out of here or closed above? No. So you still see the point of control of this big black candle is still holding the market down. Now, eventually, what happens right there on Monday, February 23? The bar closes above. So Jove, the same zone. I just changed the color to green now to show now that these sellers that were originally here, they could be canceling their orders and they could be now placing sell orders up here, up here, up here, above highs. They want to sell at a premium. Buyers now from down here, buyers were there holding support. Buyers were here holding support. Buyers were here waiting to get filled. Now they're coming and putting their orders in the green zone now. And they're starting to get filled. And then it moves back up. And then look how long we were trading in this zone for. There was an impulse breakout. It came almost to the all-time high. Okay, you guys know all-time high. It came into the all-time high zone. See, it came into the all-time high. It's better to sell at a higher area and it's better to buy at a lower area. That's how trading works. But we're still, look at majority of the volume, still trading in the zone. Black, blue, black, blue, black, blue. Again, now it looks like a, like a head and shoulder pattern. It came up, back down, inside, and then look at the same zone. Jove, you can use this for 1 month, 6 months, 1 year, 10 years. The zone is the zone, okay? Now, does this black candle close below the same zone? Yes. So when it does, I just change the color of the zone. And now it's a red zone. And then now we start to really push down. See this candle? This is another structural candle. Look at it, guys. Did it close below the pivot right there? Yes. Did it close below those bodies? Yes. Is it majority bigger volume than this candle, this candle, and this candle, and this candle? Yes. It's about 2, 3, 4, 5 times bigger than all those candles. So this same candle, again, I could do the same thing. Now find the point of control of this candle, because if it comes back up here, it could be where the lower high is and the sellers are continuing to push the market down. Okay, so you see how you can find structural candles as they develop. After they close, you should be able to spot these things. Okay, have we traded in here? No, we have not. No, we haven't. Okay, will it come in here? Maybe, I don't know. But if it does, it might do this. It might do this, or it might do this. And then Jove, if it goes from this zone, it could come right back into the zone above us. If it moves again higher, we're coming back into the all-time high zone. So there's a zone here, and a zone here. And I like to trade the volume in between these zones. I measure it from here to here. If it fills, I know it's a big move on gold. That's a $120 move on gold. That's 1,200 pips. I know if it comes right to there, $180 move, 1,800 pips, right? If this was 5 minutes zone, if I was on the 5-minute candles and I'm measuring just a 5-minute scalp from here to there, it could be 120 pips in 5 minutes, okay? That's what you got to know what you're looking for as a trader, okay? So perfect. You guys identified the correct candle, structural candle I was looking for. Let me just continue my top down really quick because I got to finish this call in 10 minutes, okay? And I don't want no one spamming because the other gentleman got timed out, okay? So this is an all-time high. We all know that. There it is, all-time high. Look at the number, 50, just below 5,600, psychological. How do we find the zone off of a point of interest? Drag it down to the most recent bodies. There's a closed body, open body, okay, right there. Red zone, Jove, we stretch it into the future. We see when it came into the all-time high zone, it continued to push down. If gold ever comes back into the all-time high zone, we're ready. We're waiting for it. How are we waiting for it? Again, set an alert. You can set it at the all-time high, you can set it at the middle, or you can set it right at the bottom. Wherever you guys set it wherever you want, okay? I'll set it right in the middle, right there, add an alert. If gold ever comes back here, I'm ready. I'm not saying I'm gonna sell it, but I'm ready to patiently wait for a high probable setup. If it does like this, I'm selling. If it does this, I'm buying gold to 6,000, right? I'll trade off of this block, okay? Let me put it that way. Now, again, when we're doing top-down analysis, follow the big push down. It came and it stopped right there. Remember the wicks? Okay, so look, it came down there and stopped there and came back up. Look at the number again, psychological number at that wick, okay? 4,400 and came back up, okay? And then now look at the most recent volume when you're learning. So that's where it came down. You remember where the market was moving down, and Donald Trump on Monday at 7:03 said everything in Iran is done, completed. The market liked it, said the war would be over, and the market bounced up. And look at how it closed at the point of interest. See how it built blue, came back down, black, blue again. There's a double bottom, and then it continued to move up, but we couldn't advance like today. Gold sold off and came back up. Again, Donald Trump made a speech last night, so it kind of affected the markets. Okay, so we're trading in here. But if you want to now find other points of interest, just follow the wick of the candle, follow it up, and see where it closes, and look at your next bar where it opens, and look at where, again, it retests. This is now POI. Okay, you see? Body close, body open, OHLC. Remember, those are important points. And now look at the previous pullback. again, right there. See how it came and then pushed right back up. Now, this line is static. You see how this line over time, again, look at where the body of that candle closed. Look at where it opened. Look on this day, Tuesday of this week, we closed above and we continue push up. Look at today. We broke right through it impulsively, but it came right back up and closed above it. So this line, 46.50, is still current support for gold. We could maybe just trade here, like next week, for a little bit, consolidate, and then maybe it continues pulling bullish. Maybe we could be now in a bull flag, and it's going to continue to build in here, blue, black, maybe blue, black, and then we break out again, right? Or it could just now start to be a neckline where it's ready to come down, where it came down, back up. It tried to come down, but then it got right back in there. But let's say it comes back down and closes. That's a red zone. We could be pushing back down there, and then we're looking to break to fill this big wick. Start to now look at this, double bottom. This here was a red zone. When you understand what you're looking for, red zone in the future, blue candle close above, green zone. Into the future, consolidate, continue go up. Look at the green zone in the future. That wick came down right above the green zone. Look at now. We broke, grabbed liquidity, and the volume's still higher low in the green zone, higher low in the green zone, and built right back up. So you got to know that that green zone is still there. There's another high probable zone right there, point of interest. Cut that big blue candle in half. Look at in the future. It came in there and held. There's a double bottom. Came in there, one, boom, and then back up. Retraced and gone. Retraced and gone, right? So underneath there is another green zone. Very easy. Okay, everyone following on YouTube. Okay, guys, stop being snowflakes. Okay, stop being snowflakes. Okay, we used an analogy earlier of a snowball, but now you guys are being like snowflakes. Okay, if you guys get your feelings hurt from someone getting timed out, you guys are bitches. Straight up. If someone is spamming 100 fucking times, it's annoying. Don't and then now you guys are getting offended. Then go learn somewhere else. Then like, what do you want from me? If you're a snowflake, you gotta grow some balls once in a while. You gotta grow up. Come on. Spamming is spamming. It's annoying. If someone gets called out and now you're offended by it, then well, what do you want? I said nicely, stop spamming. And then another time, another 10 times, and I said stop. Then another 10 times, and then I said I'm gonna put you in timeout. What do you want me to do? Holy shit. Oh, guys, soon we're going to have private Zooms. We're going to try and get that 100,000. But after that, we're going to limit some YouTube calls. Because I'll stay here with you guys on YouTube all day, all night. But it's this shit. I'm trying to teach you guys. And now you guys you're sticking up for someone who got his feelings hurt. I've got my feelings hurt and what am I going to do? I'm going to sit here and cry? Come on, stop being little bitches. Grow up. Like, come on. Like, this is tough teaching. This is tough love, okay? I really want him to learn, but he's not going to learn by spamming. It's not going to get him anywhere. If you just sit and pay attention, I promise you'll learn something. That's it. It's up to you, okay? If you want to learn this, it is completely up to you, okay? I'm telling you the honest to God facts coming from my heart. I know how to do this. I don't need to teach myself this. I'm trying to teach you guys this. But spamming doesn't help. It doesn't help me, and it doesn't help the people that are actually listening and trying to learn. Because all they see in the chat is spam. And I'm asking you guys questions. I'm trying to interact with you guys. You guys are asking me questions. That's what I want. I want you guys engaging in the conversation. That's how we learn. But spamming pisses me off, and it pisses other people off. That's it, okay? So let's get off of this. Now, let's just go back to top-down analysis, okay? We figured out some zones. Now, real quick, let's end this call. I know not to waste my time with them. And then everyone says, yo, Ron, chill. But it's the same shit on every single call. You know what I mean? It's the same shit. Like, it just doesn't stop, okay? So anyways, let's just continue going. You guys want the analysis for kind of like going into next week. Okay, so we got to look for one more structural bar. That's it. Okay, so you see this? There's a body, and a wick. So see when this candle came down and closed right at that line, I consider that still to be technically like a structural bar. So with that bar too, what I do is, again, cut it in half and figure out the point of control. It's got some majority volume. It pushed, it did some damage with the wick, and it closed right there. So with that body as well, I cut it in half, go red, and now I wait and see. So I see today was a fake out. Now that I can see that the candle has officially closed, it looked like a fake out. It came in, closed yesterday. We pushed up, okay, was bullish. Then they rejected it, came all the way down there, traded into the point of control of this candle and a little lower, picked up lots of orders and closed right there, okay? So you guys see the neckline, how we're moving into next week. So yes, it did come up with a nice rejection, but we're trading here. So this is a pattern I recognize all day. Came down, it came back up. I know it could come down for a double bottom and do that. Absolutely. We know that it could do that. There's one pattern could happen, but it's also trading at the neckline where when it came down, it could hold here, continue doing this and drive. Absolutely. But now it could also provide a leg coming down where it came up, faked out, traded low, but it came back in. What if we consolidate under the red box and then next week we're filling the wick and then we're pushing back down? It might not be a double bottom because they already did some damage earlier. So what happens if they come back below and close it below there? And then gold is continuing to sell off. Where? Well, we got to continue to fill wicks. So I got to highlight that wick. I got to highlight that wick. And then I got to look at some structure in between if I'm trading inside here, right? So now, like let's say I was getting ready to do a top down and get ready for trading. Okay, from the daily, now I move, you can go into the 4 hour or you can go into the hourly, you can go in 30 minute, 15 minute, 5 minute. I choose one of these hourly ones. So you can choose 4H, 2H, 1H. I like to go in the 1 hour because I know specifically which hour of the day is an important hourly candle. I know that 8 p.m., like right now, is futures market open up. I know that 3 a.m. Eastern is London, UK market open up. I know that sorry, you are taking so much time. Okay, guys, if I'm taking so much time, let's wrap it up. It's all good. I know I am taking so much time. We should end it. It is 8:30. But what I was trying to say on the hourly is make sure you know your hourly candles. For the guys that know, they know. Okay, so I'm not gonna explain it, but you got to know. And hourlies also make some type of structure, some type of support. There's a double bottom on the hourly. This is a big hourly candle. That's a structural candle. Hopefully you guys can cut that in half, find the point of control of that candle, okay? So right now, if I was, again, getting ready to trade, because I know I'm yapping and you guys are calling me out, that's fine, because I want to end this call too. Right there, we're consolidating. Blue, black, blue, could come back down black, could go up blue, okay? So you're in an hourly consolidation. Do you have some hourly points of interest? Absolutely. Here's a point of interest. There's a point of interest. If you go into now the lower time frames, you know, you could start to look at the 5 minutes and you got some zones to trade off. Yeah, guys, I'm going to wrap it up because this call, that's why it's hard to do education. It's really, really hard to do education, but I try my best, the best that I can do for no cost and 2 hours out of my time. So for some of you guys, I appreciate you guys. But if you're going to trade, like what I would be doing is understanding that the 5 minute candles did break out there and come back in. So it's in that hourly zone. There's a big 5 minute candle. That's a structural candle. So 100%, I would have done my analysis to figure out the point of control of that. If it ever comes back in, could be looking for some buys off of there. Could be looking for some buys off, you know, the bottom right there. Could be looking to sell up here. And then just looking, if you're going to trade inside here, if you want to do micro scalping, you see that the 5 minutes have a little support there. So for example, micro scalping from red line to the yellow line, you measure, take your measuring tool and measure. If it goes all the way down there, 120, 130 pips. But you have to understand that if it comes down there, just look at what the buyers did. They came in and they bought right there and it went right back up. The buyers, second bottom, came back in there. They bought it and went right back up. So if you're in a sell and you're coming down and you're up 120, 130, 140, 150 pips, and you're in there, look in the past. It's telling you, it came in here and went back up. Came in there, went back up. Why, if it comes in here and you don't do anything, it could go right back up, right? The only thing is if you continue to hold it and it closes below there, then you might be good. You might get a bigger move. But the candle has to, do what we were talking about. Close, retest this, and continue to drop. Because it could just come in there and bounce. Because why? There's pending buyers waiting in there, waiting to buy that. And if you're selling to them, you have to know that you're selling where the buyers are. Just like if the buyers here are buying, they got to know where the sellers are. So even the buyers came in, but sellers are pushing it down with lower high. So even if these buyers come inside here, they got to know that the sellers are here and could push them down unless they can continue to break and close above and make this zone green to go up to there. Okay. But guys, that's it for today. Okay. So today was more of an education session because the market gold is closed. I don't think I'm going to get up tomorrow morning for NFP. There's no volume in the markets. It's going to be too choppy, too much spreads. I don't want to engage with someone blowing up their accounts for something silly. It is Good Friday, Easter long weekend. Let's all take a weekend off and we're going to come back Monday evening this time for real trading and analysis where the markets are actually moving. Okay. So tomorrow, this weekend, everyone rest and relax. If you are deciding to trade, there will be some securities moving. Just do some due diligence, understand your time zone, what time banks close at, what markets are open, what securities are open. Understand that if you are trading, spreads might be higher than normal. It's honestly not worth trading tomorrow. If everyone, 99.9% of you guys can listen to me, do not trade tomorrow. Take a day off. It's not good trading conditions. It's like Monday will be a sunny day, 30 degrees, very sunny, and tomorrow it's a -5 and it's raining. What day would you like to go out and have a walk? Would you like to go walk when it's -5 and pouring rain? Or would you like to go walk when it's sunny and warm? That's how tomorrow is going to be. Monday is going to be a nice sunny day. Tomorrow is going to be a thunderstorm. You decide what you want to do, okay? I know what I'm going to be doing. I'm going to sleep in tomorrow morning and make a nice breakfast. That's what I'm going to do. For you guys, yeah, if you love the rain, have fun trading tomorrow. Enjoy the spreads and enjoy the slippage. And your broker will be loving you tomorrow, okay? I'm trying to help you guys, but I understand some of you guys do not listen. That's fine. But I know to stay away from the markets tomorrow. I've learned the hard way, and I know that tomorrow will not be a great trading day. That's up to you. Volatility, spread, slippage. For mature traders out there that want to continue to really learn instead of just play games on these calls, you guys, I'm talking to you guys. But for me, guys, have a good night. I hope you guys learned something. We'll keep this uploaded to on the YouTube and you guys can join it. But out of today's call, make sure you identify structural candles. Make sure you guys know how to cut it in half and find the point of control. Make sure you guys know how to set alerts. Make sure you guys know how to be patient and disciplined and try to the best of your ability, wait for confirmations instead of trading on impulse. If you do engage on an impulse trade, just lower your risk. Understand that you're trading on an impulse and it could come against you, but if you go lower risk, you won't lose as much, okay? But I know some of you guys, no risk, no Ferrari, and I know how you guys trade. But you will learn your lesson. Everyone will learn their lesson. When you burn your hands on the oven, you will learn your lessons, okay? And thank you guys. To everyone celebrating Good Friday, happy Easter. I hope you guys have an amazing weekend with your family and friends. Take the day off. It's Easter and Good Friday. Enjoy that time with your family and friends. The markets will always be open. The markets will always be moving up and down. And there's lots of days to continue trading. Take a day off, okay? It's God's day. Take the day off with God and relax and rest up, okay? And we will see you guys on Monday evening. And I canceled the Saturday session because when I put it on the schedule last week, it was I forgot it was Easter long weekend. So there won't be too many people on that call. So we'll push that for next weekend. But tomorrow, guys, don't forget, I will be uploading. I have a pre-recorded webinar for you guys. Maybe on the weekend, watch it. It will be over here under education. If you go, it's psychology and mindset. So it will be where I believe it's the 7th video. Yeah. So we just did creating and sticking to a trading plan, and tomorrow's that we're going to upload is, sorry guys, I forget a lot of things. It's discipline and consistency in execution. So that's what we were talking about. When you execute a trade, make sure you have discipline to learn consistency in execution. So that's kind of a little bit what we talked about on today. Guys, and don't forget, if you want to join the Stock and Options Bootcamp, we're going to do it on the week of April 20th for 6 days straight, okay? And it's going to go into a Saturday. It's packed with lots of information that you're going to learn about the stock and options market, because I know some of you guys are hungry and itching to learn something new other than just Forex and futures. Now you can learn how to make money from Forex and futures and invest it wisely. Whether you want to be a day trader, a scalper, a swing trader, or an investor in the stock market, you can choose to buy shares of Apple and learn how to do covered call positions and earn premium passive income. You can learn how to trade options with minimal capital, but high reward is option trading. And you guys can learn the whole world of dividends and other securities that you've never maybe heard of. We're going to talk about what are ETFs, mutual funds, these things that a lot of financial institutions are engaged with. But we'll teach you guys that. And you guys have an entire 3-month premium plan program that you get with it, 6-day bootcamp and a one-on-one session with yours truly, the Yapper. And I will yap with you on a 2-hour Zoom call, you and I, and we will figure out everything that you want to learn. And you can, if you join up, you can spam on that one-on-one call as much as you want, because it's going to be me and you know? So that's where you can spam all day to me, and I will spam back to you. But that's where we're not disrupting others while they're learning, okay? If you guys want to join, it's all good. There's going to be limited spots because I want this Stock and Options Bootcamp to be small, private, and we're learning together. And I don't have too much time for a lot of one-on-ones, so we're limiting that. So right now, those one-on-ones are included. After probably next week, I'm going to take them off, because I've already got a couple of guys that signed up and I can't do too many of them because I still got to do one-on-ones with the lifetimers. Okay. But that's for you guys if you guys want to learn about stock and options. If not, you continue with Forex with us, myself, Dave, and everyone in Discord. Okay, guys, I'm going to go watch the hockey game now. Everyone have a great day. Enjoy the Final Four this weekend. Big games, UConn versus Illinois. And my favorite game is Saturday night. It's Arizona versus Michigan. Unbelievable games. Enjoy if you like March Madness, college basketball, and playoff hockey time is coming up. So we will see you guys. Timmy, I picked on you, but hopefully you learned on that. And Hove, I picked on you as well. So I hope you guys learned. So thank you guys. Have a great Easter long weekend. From myself, from Dave, and all of the snipers, God bless, and we will see you guys Monday. Thank you. Lucy, have a great day. Lady Stone, take care. We'll see you guys. Have a good day, guys. Everyone on YouTube, take care, guys. No hard feelings, okay? If you're a snowflake, you got to get a little tougher. You got to get it tough. The markets are tough, okay? The markets are ruthless. The markets don't give a shit if you're a snowflake. Unc is trying to toughen you guys up. Believe me, the market makers are ruthless. They take your money. They take your money and they spit at you. I'm actually trying to help you guys. So I'm actually the nicest guy. But if you think I'm mean, oh man, you haven't met a market maker. Wait till you meet them. They're ruthless. They will take every last penny out of your pocket and step on you while you're at it too. So have a good night, everyone. Forex Borex, my man, thank you for being on the call. Everyone, shout out to Forex Borex for everything he does at SST in the Discord. He is the man. Thank you, guys. Have a good day. If you guys are asking why gold is closed and the market is closed, you guys got to understand this. It's a Good Friday. The Like these are basics, guys. You know, school, your kids don't even go to school tomorrow. So the markets are not open, guys. Okay, you understand? Stores are closed tomorrow. You can't go buy groceries tomorrow. Everything is closed tomorrow. Everything. Banks, markets, grocery stores, department stores, everything is closed, guys. Okay? It's a day of rest. Rest and be relaxed. Have a good night, everyone.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.